What's going on YouTube? Welcome back to the channel. My name is Dominic, and in today's video we're going to be talking about Joby Aviation. Now yesterday I talked about Archer Aviation and why I was right about that stock. I called it a scam. It was kind of clickbait. My main thesis on Archer was to be wary of their valuation. They're valued way too high for a company that's not going to make any revenue until 2024, no significant revenue until 2025. And I said in that video, in today's video, I'm going to be talking about Joby, and we're going to be comparing both companies and seeing which one lines up better for the future. It's going to be a great video. Just looking at the share price alone, Joby is ahead. They're currently $8.80. Meanwhile, Archer is $6.80. So Joby is, trading at a higher share price, which actually does mean something because these were both SPACs that were trading at the $10 range for quite a while. So that does mean something. And we look at the market caps. Joby has a $5.3 billion market cap according to Webull. My calculated market cap is about 5.5-ish. So it's still pretty close. And then Archer's market cap is $1.64 billion. So Joby is a bigger company, and you're going to see why in this investor presentation right here. So we're not going to waste any time. We're going to get straight into it. If you guys want to find the investor presentation, I'll link it down in the description below. Subscribe if you're new as always. Like the video as always. And I just want to state that I'm not a financial advisor. Now that I got those things out the way, let's just get right into the video. With number 3, slide 3. Cities are getting bigger and they're getting more congested. It says that urbanization and an inadequate ground infrastructure remain powerful obstacles to mobility. Sustainable mobility is more critical now than ever, and it shows some stats that we should be aware of. 4.6 billion hours a year are wasted in traffic in the top 15 US cities alone. 29% of the US's carbon dioxide emissions attribute to transportation sector, so cars, anything transportation. That's 29% of all carbon dioxide emissions. And they say that 70% of the global population will be living in cities by 2050. That's going to be up from 55% today. That's a big increase. And of course, those numbers should scare you. 29% of US carbon emissions are from the transportation sector, like traffic and things like that. As more people move to cities, we're going to see more and more traffic unless we could come up with a viable solution. Joby says they're shifting transportation from 2D to 3D. So just so you guys can help visualize this yellow line is a flat surface. They're traveling on flat roads, going all the way to their destination. With Joby, you could go up in the air and fly these eVTOL vehicles up, and go straight there. So it's going from 2D transportation to 3D transportation. They're saying that it's sustainable, it's fast, and it's scalable. On top of that, they have a massive untapped market opportunity. They said they're going to have 300 plus aircrafts, and they have a market opportunity of $500 million a year in LA alone. That's huge. That's just LA. LA is massive. Now imagine all of California, and then all of Florida, all of Texas, all of New York. When they start building into these markets, they're going to start generating a lot of revenue, and their market opportunity is going to increase very quickly. So they start off by mentioning the problem, right? The problem is there's a lot of traffic that's leading to a lot of carbon emissions, and people just spend so much hours each year just sitting in traffic. They show you guys the solution, and now they're showing you what is going to cause the solution. It's going to be Joby. It says meet Joby. They have vertically integrated transportation company, which is great. They're building everything in-house, so they're vertically integrated. That's very, very good. That's what you want to see as an investor. It says that they develop, test, manufacture, and will operate a revolutionary new aircraft, and they plan to launch their app-based aerial ride-sharing service directly to users in 2024. And the last point it says is that they have world-class partnerships and a strong financial foundation. Now, they're not lying. We're going to see later on in this presentation why they say these things. First off, they're saying that Joby is the right aircraft for the market. It's designed for safety, it's designed to be quiet, and it's designed for sustainable returns. That's very, very good. It has a 200 mile an hour top speed, 150 plus mile range, a vertical takeoff and landing, so it's like a helicopter, and it has 0 operating carbon emissions, which is great. This is the future. eVTOLs are the future, whether it's from Archer or from Joby. This business model is very interesting, and it's very it's promising. It's risky, but it's promising, and if this business model does pull off, one of these companies are going to excel in this space, and my bet's on Joby. You're going to see why as I move on to the presentation. It says they're progressing steadily through the rigorous FAA process, which is big. They need to be FAA approved before they can start flying. So they plan to have the verification of their compliance by 2023. They're currently trying to get the means of compliance, and it shows this little timeline right here on where they are. Now, when you compare this to the competitor Archer, Archer's very quiet in what they're doing. They're very quiet in how they plan to, get this FFA approval. Joby is very transparent. They have videos of the aircraft flying already, and you can see everything step by step what they plan to do. So they're very transparent, and that's what I want to see as an investor. I do like Joby a little bit more for that reason as well. They give out more information. The best part is that they say their aircraft will operate within existing aviation rules. They currently already have commercial level pilots to drive these vehicles. They're going to use existing VFR and IFR rules for the airspace, and they're going to get their air carrier certificate by mid-2022. So they're going to be, operating within aviation rules, which they should be. It's a new vehicle, but just because it's a new vehicle, new aircraft, doesn't mean that they should have the rules changed to meet them. They're saying this ride-sharing service is going to be similar to Uber. It's similar to Uber, a Lyft, things like that. It says it's a 4-step process. You could press a button, select your destination through the Joby app or a partner app like Uber. Then the Joby service will synthesize a trip for you. Then from there, you go from the skyport to your destination. It's great. You can't beat it. You really can't beat it. When we look at the service unit economics per scale, it shows the revenue per available seat mile and the cost per available seat mile. So the cost per available seat mile is 86 cents, and they explain exactly what it's going to cost per mile to get that. They said that the pilot's going to cost 22 cents a mile. Maintenance cost is about 19 cents. That includes labor. Skyport, Surport, and landing fees, which is, their airport, they call it Skyport. So the fees for that, there's going to be a 13 cents battery and charging fee per mile, a 9 cent that goes to aircraft insurance, and 12 cents go to other expenses. So that means a cost per available seat mile of 86 cents. Like I said, Archer is not giving out this information. You're seeing the exact details, list by list, cost by cost, what's going to cost per mile for these seats. And then you see the revenue per seat mile. They're saying that, the average flight length is going to be 24 miles at a cruising speed of 165 miles an hour, with 2.3 passengers per load on average, and about a 6-minute turnaround time. You're getting a price per seat mile of $3 a mile. That's a revenue of about $1.73 per seat. So the revenue obviously is higher than the cost. That should be a given. You're going to want that in any company. But I like these margins here. It shows the revenue for actual per plane economics. They plan to generate $2.2 million in revenue per plane. When you subtract the cost of goods, which is, just the cost of what they're doing, it's about $900,000. So that goes to a gross margin of $1.3 million. Then again, you do other expenses, subtract that. You're looking at about a margin of $1 million, a total margin of $1 million. That's a payback period of about 1.3 years. They're making their money back per plane in 1.3 years, which is virtually nothing. Within a year and 3 quarters, not even 3 quarters, like 2 quarters, they're going to already be profitable per plane. That's very good. That's what you want to see financially. That's very, very strong. They have a lot of significant partnerships that make me very bullish on them, and this is why they have a much higher market cap than their competitor Archer. And it's because they have these partnerships, so they're valued much, much higher. First off, they have a partnership with Uber. They're going to be working on something called Uber Elevates. They have a partner with the US Air Force, and they're partnered with NASA. Those are big companies. Then you have them partnered with Toyota, Toray, and Garmin. Garmin is very underrated. People don't really talk about them too much, but they have a lot of great technology. I use them for a lot of things. That's very, very interesting. And then for the infrastructure, they're partnered with Related, Signature Aviation, Macquarie, and Reef Technologies. Reef Technology is very popular. You might have heard of them on my channel. I talk about them for BurgerFi. They're all over the place, so that's also something you want to see. Now, I'm not going to talk about all of these different people that are working on their team, but as you guys can just see, the people on their team are very experienced. You have a founder of Pinterest, a senior director of Tesla, a president of JetBlue, The head of Uber elevates on your team. You have the CEO, CFO of Ford. Like, there's a lot of big people working on this company. A lot of big people who have worked for big, successful brands. And that's really what you want to see as well. They have experience. They've worked for big companies, S&P 500 companies, may I add, Tesla, Uber, Ford, Apple, promising companies like Virgin Galactic. Like, this is crazy. They have a lots of experience at what they do, and that's what you want to see. Slide 14 kind of highlights overall everything about Joby as an investment that makes them interesting. They're saying case one is that they have a world-class team with world-class partners. They have a team of 800 plus people with deep aerospace, software, and electrical engineering experience, 1,000 plus combined years of certification experience, and world-class partners supporting every step of the journey, which is true. You guys saw that from their presentation. They partner with the US Air Force, Uber, NASA, Toyota, Garmin, much more. So they do have that on their side. They said that they have the best aircraft for the market. It has 0 operating emissions, 5 seats, and 150-mile range, and 65 decibel audio, right? I think that's what it means, which is designed to be certified and operated under existing regulations. They don't need to mold regulations for their aircrafts. They're going to fit the current aircraft regulations for the FAA approval, which is great. Third case, they have the first mover advantage. This is huge. I love companies that have the first mover advantage. That's why I'm bullish on companies like Lion Electric. Says that they have 1,000 plus test flights completed. They're the first and only eVTOL to sign G1 with FAA. They're the first to achieve US Air Force airworthiness, which is great. Them being early drives strong network and scale effects, which is also very, very true. So there's a lot of advantages that come with being the first mover in a new markets, especially one that's as promising as aerial ride sharing. So I do like to see them as the first mover as well. Number 4, they have a vertically integrated approach. All their key parts are designed and produced in-house, and the production scaling is supported by Toyota. So Toyota is helping them with scaling this production, which is great. Toyota is debatably the most reliable, best car manufacturer out there. So the fact that they're going to be helping them with production, you can't beat it. You can't beat it. On top of that, they say that they're going to have recurring revenue from the operating aircraft, delivers compelling economics compounded by scale. Also true. Once you spend the, $1.5 million per aircraft to build it, once you're done building that, they're going to have their money back in a year and a half, less than that. Anything past that year and a half payback period is going to be pure, profit they get to take home, which is great. It's great. Case 5. They said that they have a pragmatic approach to commercialization. They're going to be integrating with Uber, and they're going to be integrating with the Elevate acquisition. That keeps customers' insights and day one demand. It's the best in-class infrastructure partners that provide access to prime locations in key markets. That's also very true. They're going to be integrated with Uber, and they also bought a platform from Uber called Uber Elevates. So they're going to have all the data from Uber Elevate that they currently own, and then be partnering with Uber, the company itself, to work with them to decide which markets are going to be good for them to enter. In case 6, they have a very strong financial foundation. They have a lot of cash to support their business through commercialization, and they have stage investment approaches that provide flexibility. So as you guys see, the bottom part of the page shows their partners, who they're working with, which are all big companies, and of course the investment highlights. Great. There's a lot to love about Joby. You really can't beat that. And of course, they end the presentation by saying that their vision is to save 1 billion people an hour a day, every day. People waste so much time in traffic, and Joby wants to change that and also help the environment by creating 0 emissions from their vehicles as well. I think this is a rendering drawing probably. If it's a photo, this is gorgeous. I just want to comment on that. Now, people who are subscribed to me and they are channel members, which you can become a channel member down in the description below. It's $2 a month. Go check it out. My channel members, they get access to this right here. And essentially what these sheets are they're basically investment theses on every stock I talk about and what I like about them, what I don't like about them. So this is for RTP, which is a while ago when I first started making my channel member sheets. This is for Joby. Again, this was their old SPAC ticker. I'm gonna change that to just Joby. I already did update their current, price, because when I did make the video a while ago, they're at about $11.80 a share. They're currently at $8.75. That gives them a market cap of $5.75 billion, an enterprise value of $3.8 billion. I give a quick summary of what I like about them, just a quick little executive summary. Then I mentioned their risk factors. They're operating in an unproven market. Their TAM is unproven. This is a completely new business model that we haven't seen before. They're going to have negative EBITDA, so they're going to be unprofitable until 2025 estimated, and they have a slow scaling phase. They're only going to scale into one new city a year until 2026. So you could look at that as a positive or a negative. The fact that they're scaling so slowly means that they want to scale properly, and they want to make sure that the markets they enter, they become really good at, which is great. You want to make sure that they're effective in their new markets, which is why they're only scaling into one new city a year. But again, that means they could lose out to companies like Archer or other companies who are going to be scaling much, much faster. That's another risk factor you guys to be aware of. But for the upside, number one, they're vertically integrated. All their parts are going to be manufactured in-house with support from Toyota. Number two, they acquired Uber Elevate, which is going to help them partner in US launch markets like Los Angeles, Orlando, New York. A lot of these big cities they want to work with, they're going to use Uber Elevate to help them enter these markets effectively and properly. I mentioned this in this current investor presentation. There's a 1.3 year payback period per vehicle. They're making their money back per vehicle in 1.3 years. That's nothing. That's very, very quick. And of course, they have long-term EBITDA margins of 40%. So that's the upside, the risk factors, and of course, I give you my thesis right here. I'm not going to talk too much about it. I'm not going to quote, the entire sheet, but that's the little benefit you get from becoming a channel member on YouTube. You get quick investment theses on every stock I do talk about. It's great. You could check it out. I would say I'm gonna link it down in the description below, but you could literally just click join or become a member today in the comment section, and it should work. So go check that out. It's only $2 a month. As I said, you get access to this, and I'm gonna start streaming once a month as well for only channel members, so we get to answer any questions you may have about literally any stock. We could talk about anything. But yeah, that's all I have to say in today's video. If you did enjoy, please subscribe down below. I appreciate all the supports. Like the video as always, and let me know down in the comment section, what are your thoughts on Joby? Do you prefer Joby over Archer? Let me know down in the comment section. For me personally, I'm taking Joby all day, every day. They're both risky, they're both gambles in my opinion, but I'm going to take Joby all day, every day. They have the partnerships and the infrastructure set up for them to be successful as a company. And I feel like the fact that Archer is more popular just because of Cathay was investing in them is blasphemy in my opinion. Joby should be the leader. They currently are the leader, and if I had to invest in either Joby or Archer, Joby all day, every day. Hope you guys enjoy, and I'll speak to you guys next Monday. Have a great weekend. Peace.